Good morning, everyone. It was a good day for the dollar yesterday and a great day for the euro, but not so good for the commodity currencies. The dollar moved higher against most currencies except the euro, as the lowest U.S. jobless claims in 5 years and a further rise in the U.S. Manufacturing Purchasing Managers Index outweighed the fact that the Fed's balance sheet topped $3 trillion for the first time ever. U.S. Treasury yields rose about 3 basis points in the long end, and stocks closed just barely higher for the 7th day in a row, despite considerable disappointment with Apple. That indicates that investors think the U.S. economy is getting back to what we might call normal, not what's recently been referred to disappointingly as the new normal. Nonetheless, all three commodity currencies fell, which is surprising given the good news in the U.S. and after the Chinese Purchasing Managers Index rose to a 2-year high. The falls were due more to individual country stories than to any overall change in risk sentiment. Aussie dollar was still being impacted by Wednesday's news that fourth quarter consumer prices in Australia were lower than forecast, which increased the possibility of a rate cut at the Reserve Bank of Australia's February 5th meeting. Only 7 out of 27 economists polled by Bloomberg are expecting a cut, but that could change as they revisit their forecasts. The New Zealand dollar was down after Fonterra, the world's largest dairy exporter, found very low levels of a toxic chemical in its product. And the Canadian dollar is still hurting from the recent Bank of Canada statement that lower than expected inflation reduces the need for an imminent tightening of monetary policy. Now, Aussie dollar is touching an upward trend line, so there could be some technical support at around 104.50. Given the positive change in global growth sentiment, I'd be a buyer at those levels. The New Zealand dollar, too, should gain on continued robust global growth. We'd particularly recommend buying those currencies against the yen, which we think is likely to depreciate further. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.